Mark Zuckerberg is spending money and stealing talent. Over the past month, he has poached some of the top AI research scientists from OpenAI, from Google's DeepMind. He is a man on a mission. Meta also bought an AI speech startup called Play AI, and they hijacked the executive team and invested in Scale AI. Beyond that, he's building data centers the size of Manhattan, investing over $60–70 billion just this year in AI infrastructure. That is the equivalent to the GDP of Luxembourg. It's even being reported that he's meeting with individual researchers in his attempt to poach them to come over to Meta. And he's giving out offers worth hundreds of millions of dollars, trying to convince people to leave some of the top research labs in AI right now. It seems wild, maybe even seems a little bit reckless, but in reality, it actually makes a lot of sense. This type of decision-making is very common amongst billionaires, amongst top technologists, venture capitalists, and founders. And I think we as a society would all be better off if more of us understood exactly what sorts of frameworks that these people use to make decisions in the world. But it's choices like Mark's, and not only Mark's, we'll get into other examples that we see in our politics and our society with other technologists as we go. But all the choices being made here are made in a framework I'm calling the binary bet. And binary bet thinking drives way more of 2025 than we might give it credit for. So let's think like a billionaire, starting with Zuck, before we tie it into wider societal trends. Okay, so why is Mark spending so much money and moving so aggressively? We can think about a few of the things that are really at stake for Meta and for Mark. And it starts with the vicious cycle of reputation and recruiting. Right now, with Llama 4, Meta has an AI model that is maybe the 11th or 12th best on the market. It's not impressive. They're seemingly not yet on the precipice of something much better. And if we think about what it takes, especially in 2025, to attract top AI researchers, having a respected team, having a reputation for building AI products isn't just good for your market cap. It isn't just good for investor sentiment. Those are the teams that the top researchers with the most interesting ideas are going to want to join. If you're number 11 in AI, then the A players that you need on your team will stop replying to your recruiters. And suddenly you don't have an escape valve for this loop of not being able to draw the top talent, which is going everywhere else and leaving you in the dust. And Meta's already been really aggressive in putting AI into their products, which right now involves their own model baked into all of their features. But if there's a point at which their model lags too far behind, it's going to become existential and they're going to need to go to a third party. They're going to need to pay OpenAI or Anthropic or somebody else for usage of their model. That's not only going to drive up costs, they're not going to have as much control over their product because they're not making the minutia sorts of decisions about how exactly the LLM works within WhatsApp and Instagram and AR and VR. And kind of at a high level, there's political power and influence. Having a top model right now means you're part of a conversation that's happening in DC, happening in the world order about what exactly AI is going to mean for all of us. And Meta already is always part of the political conversation when it comes to free speech and social media, privacy, safety. And if they lose a key seat at the table when it comes to technologists and tech companies talking in DC, you can bet that Mark is going to feel uncomfortable not being in the sphere of influence. And this isn't just politics, by the way. If he doesn't have a top model that other third parties are using, in the same way that third parties build on top of OpenAI's architecture, build on top of Anthropic's architecture, and yes, Llama is one of the top open source models, but again, it's lagging so far behind some of the other top players, then you also lose the ability to have close collaborations with health tech companies and finance companies and small startups who you might acquire over time. And again, it's just the sphere of influence and not being in the right rooms. And all this gets compounded when it comes to the conversations around AGI, artificial general intelligence, or ASI, artificial superintelligence. And so again, we go back to this vicious cycle where if you're not a top player, you might just be outside of the room. Let's put it this way. If Meta doesn't become a top 3 player in AI, it risks becoming the next Yahoo. Mark wants to continue to be in the game. So that's one of the things to really think about is what's at stake is almost a little bit of everything. Okay, before we get to the longer term implications of this, I want to zoom in on the math that must be going on not only in Mark's head, but in the heads of all the folks on their board of directors. Because even if you bought everything I just said about the reputational risk, the political risk, you might still go, Meta's making a lot of money. They still have a tremendous amount of users. They're still, on the rise with Threads and at the top in some ways with Instagram. Obviously, they've got WhatsApp, which is a huge asset. And so if I'm building to this concept of the binary bet, the reasons that someone like Mark is going to just make explosive investments on being on one side of a hypothetical bet. The thing that makes the binary bet exist is the existence of power law outcomes. It's a mathematical reality that governs tech, business, finance, and consumption at large. In any game, industry, or behavior that has power law dynamics, we have to think about is that it's a winner takes most market. A tiny number of winners generate most of the returns or the reward inside of that market, while all the others get almost nothing. And you can see that in the literal mathematical distribution of the power law. So we've got this blue line here, and this is a normal distribution. We've got a peak, obviously, but for the most part, what you're seeing is something that's a little bit evenly distributed to the left and the right of that peak, and amongst a decent number of participants here on our x-axis. But in a power law game, what winds up happening is that fewer participants earn all of the rewards. The area under the curve is what represents all the returns. And again, it's for a decent number of participants with a peak, but decent distribution to the left and the right of that peak. With the power law game, you've got a fewer number of participants achieving more of the reward. Let's make that practical for a second. There are a couple places where this is really on display. The first being venture capital. So this is startup investing, this is tech investing. So in this chart, every year has the returns from startups that received their initial venture round of financing in that year. But the dark blue bars represent just the top 100 investments from that year. And if you math out the math, what this is really saying is about 2.5 to 3% of startups generate the same amount of return as the next 97% combined. This is an analysis that was released in 2014. A more recent analysis says 6% of deals produce 60% of returns. And by the way, half of deals amount to absolutely nothing. You lose your money. And the way you'll hear this talked about in venture capital or in tech is that the winners pay for all of the losers. And so what winds up mattering to a venture investor is making sure that you're in some of the winners. And by the way, the bigger the winner that you're in, that can pay for not only a lot of your mistakes, that can pay for your entire fund. Even the difference between Facebook and Uber are really, really important in the power law game, because Facebook just generates so much more capital, or Google generates so much more capital than, let's say, an Uber or an Instacart. Even though Uber and Instacart are successful for the investors and founders and most of the employees involved, at least the early employees, it still pales in comparison to having been an investor and employee at a Google or a Facebook. And the same thing actually winds up being true in our consumption and entertainment sectors. You see it in this chart. The top books, the top movies, the top video games actually account for most of the consumption. And it's hard to imagine this in the abstract, but once you start to think about some of the real examples, then it feels kind of intuitive. Because yes, so many more people will read or watch the Harry Potter franchise. So many more people will go watch Marvel movies, even if the Marvel movies aren't the ones winning Oscar awards. The distribution effect, the word of mouth effect, the merchandising, the cyclical effect of the first thing going so well that you have the budget to make a really good second thing or spend marketing to make sure that the second thing gets butts and seats at the movie theater. These dynamics play out in our culture all the time. This is even true, by the way, people will talk about this in terms of social media or user-generated content, where, as an example, Reddit, I don't remember where I first heard this stat, but it's something like the top 1% of Reddit users generate most of the comments. Power law outcomes rule so many of the dynamics around us. And in the power law game, you'll notice again in these consumption charts, it's the top 3 or top 5% of musicians, of newspapers that generate so much of the circulation or the box office revenue. In some ways, being 7th is the same as being last. Okay, then we go back to the fact that right now, Meta is definitely 7th or worse. And so I wanted to talk about the power law game because now we're going to see the binary bet in action. We go back to Mark wanting to solve this issue. And what becomes clear is the longer-term implications of losing a power law game. And we're already seeing this when it comes to AI revenue and spend. OpenAI has reached a $10 billion annual run rate. Anthropic is next best at $3 billion. But if you combine those two, they actually account for 95% of the revenue going to AI model makers and the foundational AI companies. It's yet another power law. And so what would it mean, for example, for Meta to go from being the 11th best model to the 4th best model? Might it mean having an 11% boost in the share of AI conversations or seeing real adoption of their AR and VR products? You know, they've already made an entryway into wearables with the Ray-Ban glasses. At Meta's scale, a lot of these numbers matter more than we think. Right now, they're about 10% of the share of open source projects or third-party projects built on top of AI models. What would it mean for that market share to move to 25%, where even more people are building on top of Llama or whatever AI models they build? That might mean millions or billions of dollars in revenue coming from their API or the third-party partnerships, from enterprise deals, getting to know new startups who are building on top of their technology stack, which, by the way, again, they might acquire those startups over time. It's not just, hey, you're building on my software. It's, hey, you're building on my software. Let's have a collaboration with XYZ brand, or let's meet these new technologists and bring them into the fold. And what does it mean to be one of the first 10 or 15 companies to reach AGI, or artificial general intelligence? We're going to see AI really do things that we can barely even imagine or fathom today, to becoming one of the first 5 companies to do that. What sorts of conversations do you get to be in by being one of the first 5 instead of one of the first 15? There might be an infinite amount of upside to being one of the participants in the AGI market, to getting a 25% market share instead of a 5% market share. And again, it's the difference between maybe Meta becoming Yahoo versus Meta staying at the top. And all of that might account for trillions and trillions of dollars, right? I can't actually put an expected value on it because some of these numbers are really, really just, your imagination can run wild. But what we can say is, in some sense, Mark would pay almost anything to stay in this game because so much of the upside is still ahead of us. And that's where the talent wars come in. We've got the OpenAI researchers that he's offering huge sums to. We've got some Google researchers, startups that he's buying. And he looks at all of this and he's spending some amount of money that we might find really eye-popping and surprising. But the reality is, if we go back to the longer-term implications, solving this for Mark, it's worth a lot more than he's currently spending because he wants to be on the right side of that power law outcome. Let's go back to our graph. Mark's view is that there is a power law dynamic that's going to be at play here. The winners are going to win so large that he will spend anything to make sure he's one of the players on our x-axis that participates in the upside on our y-axis. Because again, most of the upside in his lifetime is still ahead of us. In other words, this is a probabilistic investment. He doesn't know for sure that this talent in this format is going to get him that goal. He thinks it's going to become more likely. And the only thing constraining him from spending even more money to hire more talent and be more aggressive is the certainty around it all. But if spending some billions of dollars changes the calculus of you being a tier 1 company over the next 3 years in this space from 10% to, let's say, after some key talent acquisition, some poaching, a lot of money spent on compute, you're instead at a 35% chance of being a tier 1 company, yeah, you'll spend almost anything. This is the binary bet in its purest form. Spend whatever it takes to ensure you're a winner in a market or an environment where only the winners matter. If spending a few $1 billion on people and compute increases your odds of living in the power law from 10 to 35%, and the only way we can put that is you will get to win the multi-trillion-dollar AI prize along with a few other players, you will spend generously against that goal. Okay, that explains why he's paying certain salaries to certain researchers, but I want to zoom out to the higher level lessons of all of this. Because you might love or hate these choices, but now that you have heard about them, I promise you're going to see power law dynamics and people playing the binary bet game all over the place. And Mark actually made one of his first binary bets when it came to changing the company's name to Meta and investing heavily in AR and VR. And I actually think he will still be proven right on a long enough time horizon about this. Mark at that time was basically saying, when no one else was, that there's going to be some day and age, whether it's about our loneliness or the progression of technology or the combination of the two, we're going to want to strap something to our face, AR or VR style, and be living in digital worlds a significant percentage of the time. And he might be wrong, but in the case where he's right, he's positioned his company, he's positioned the Meta platform, he's positioned the Quest product line to be one of the first and most performant players in that space and to live in the power law outcome that might come from that. In other words, if he's at all right, I'm not talking about right in the way that the Quest right now is a product that sells during the holidays. I'm talking about this becomes a primary way in which we buy devices, becomes mainstream behavior. Oh boy, he's going to accrue a lot of the money that goes into that industry. He's set himself up to win that power law game. But this whole idea of the binary bet sometimes manifests itself in really weird ways. Let's use the example of the wealthy, of billionaires doing doomsday prep, buying citizenship in other countries, building bunkers, finding out their way to escape society should something go wrong. This is, funnily enough, just again, another representation of the binary bet in the power law. If we go back to our chart, what we're seeing is the folks involved see a low probability outcome in the long tail, so some sort of societal breakdown or catastrophic event might happen. You might go, okay, that's a low probability event. Where's the big bet here? Where's the probabilistic thinking? That is where we actually see it represent itself, not just as upside, but as downside protection. Because there's so much negative risk associated with that long tail event. And venture capitalists and technologists and folks in finance are so good about thinking in power law outcomes. They're actually very good at imagining the explosion of negative consequences that they might want to avoid and hedge against. In the same way that the potential upside is so large in the case of AI for Mark, the potential downside in the case of one of these events is so large for these people who have resources to try to hedge against it that they're going to try to hedge against it. It's basically an insurance policy against the power law outcome. And we see this again when it comes to tech involving itself in politics. There's a lot that the tech right has had to put on the line, their reputations, their ability to invest in future founders, their morals and their values and everything good about them. They've all put that at risk alongside putting a lot of their capital and energy to work on a very big bet, which is that this moment, with Trump in office, J.D. Vance as the vice president, the deregulation that's now happening, the ways in which they're able to leverage foreign policy to really build deep connections with the rest of the world, with foreign governments, with key actors and players in energy and assets. All of that they've imagined, not because they have some deep-seated worldview about anarcho-capitalism, although some of them do. It's mostly that they think of capital, especially right now, as being key to grab. Not only because AI is making things weird and they might think, hey, this is a land grab and the song's about to end and everyone has to get off the ride. That might be true, but also because the power law here is so large. Because of the way that Trump is so manipulatable, that deregulation is happening at such a speed, that there's grift every day in the stock market and the crypto markets. The upside is so large, the amount of capital that could be extracted and exited so huge. And these people are good at putting that capital to work in ways that endure. Obviously, again, investing in startups or building relationships abroad, figuring out ways for their money to be resilient. And so acquiring that capital now, even though it might have cost them a tremendous amount of energy and time and reputation, well, again, we're just seeing the return of the power law. They made a big bet that they could get a lot of reward really, really quickly. And in some ways, it's so large that the future doesn't really matter to this set of people anymore. Other than in their greed or their ideology, they won. Now, these people tend to be victims and will find ways to want to leverage their power to exact revenge on their perceived foes. And some of them, again, are ideologues. But even just think about crypto, a market that was basically dead a few years ago. The world decided, you know what, we put up with your NFTs, we put up with all the DAOs and all the other stuff that you guys tried. Yeah, Bitcoin can still kind of be a thing on the side, but this is mostly over. And a few key venture capitalists and a few key power players stayed in the game. They continue to invest in startups in the space, continue to put their money into these assets at low prices with the hope that one day they'd be able to unlock the power law outcome, which indeed they have. Their funds, their startups, their crypto walls that we can't even see are all doing really well in this moment. Now look, not all power law dynamics lead to bad behavior. I want to be really clear about that. What Zuckerberg is doing with AI, for example, is going to push the field forward. He's adding fuel to the fire when it comes to competition with OpenAI and Anthropic and adding capital pressure with Microsoft and Apple. The power law is what incentivizes young entrepreneurs to dream big and try to build something significant in the world. It's what makes doing novel research in science and medicine so compelling in case you might actually land on something that is valuable to a tremendous amount of people. And so I want you to be able to understand and decode this framework, not just view it negatively. However, it is also useful as a lens about what motivates our power players. And not only that, realize that when it's the very wealthy who have already won, people with a lot of resources who can influence the game using their money and make it more likely for power law outcomes to happen, well, those folks, they are not that focused on the cost or the externalities of their binary bets. They're hyper-focused on being on the winning side of a game where only the winners matter. But that also often means externalizing the risk. If the bet pays off, they reap historic rewards. But if there are consequences along the way, or by the way, if the bet doesn't pay off, it's usually other people who have to pay the price. The scale of these binary bets is so large in these cases that I actually do think we should be thinking about some of the people in venture capital and in tech and in politics far differently than we do, because they're losing touch with the consequences of their binary bets. I mean, the venture capitalists who backed crypto and backed a bunch of projects that went to complete zero and took money out of mainstream pockets never apologized, never had any sense of shame, never had any introspection or retrospective out loud. In fact, they waited it out for so long, they got to continue their binary bet when it came to the Trump administration, and now they're back on the up. And in the case of Web3 and crypto, for no other reason than they kept it alive in the middle, because it still provides absolutely no value to any of us. There's no utility, there's no justification for the lawsuits that have been dropped or the people who've been pardoned. There's still a variety of scams that top venture capitalists put their full force behind, their reputation, their promise. And that's why I think it's so important to understand the binary bet, because otherwise you might try to rationalize people's decisions in other ways. Remember that these people control the platforms, the systems, and the politics that we engage in every single day. When the upside is potentially infinite and the downside is existential, these are moments where you're going to force people to take binary bets. Again, sometimes in good ways with Zuckerberg betting on and pushing forward progress in AI, and then sometimes in ways that are quite manipulative, the tech right influencing DC and turning their back and betraying the immigrant founders and the female founders and all the other people that have been part of the Silicon Valley community and the tech story over the past several decades. When you have the resources to make ginormous binary bets, the math changes in ways that I think we just don't understand as a society or don't have ways to talk about. And one of the points I want to make is that binary bets drive way more things than we might think in our politics, in finance, in technology. And some of these power players benefit from you not knowing that, from not realizing what game they're playing, from not yourself participating in binary bets. So again, think, when power law outcomes exist, whether on the upside or on protecting the downside, the next thing to watch out for is who are the people making binary bets, what are their motivations, and what does that mean for everybody else involved? If this framework helped you see the world a little bit differently, hit subscribe. There's a lot more where this is coming from. But that's all for now, so I'll see you next time. Peace. Word. Cheers.